It's Monday, August 17th, 2026. You're listening to the DX Today AI Daily Brief. Today, Stripe strikes a $7 billion deal for the startup that roots the world's AI models. OpenAI quietly dissolves the team that measured its most dangerous risks. And Alibaba sheds its gaming empire to go all in on artificial intelligence. Let's get into it.
We begin with the biggest deal of the weekend. The payments giant Stripe has finalized an agreement to acquire OpenRouter, the startup whose software routes requests across dozens of competing AI models, for more than $7 billion. Bloomberg first reported the agreement on Sunday. OpenRouter had become a kind of switchboard for developers, letting a single app tap models from OpenAI, Anthropic, Google, and others through one connection. By folding that into its payments rails, Stripe is betting that model routing is becoming an infrastructure problem and a billing problem, as much as a technical one. It marks one of the largest consolidations yet in the plumbing beneath the AI boom, and it signals that the money is moving from the models themselves to the layer that connects them.
From deal-making to safety.
OpenAI has disbanded its Preparedness team, the group responsible for assessing whether its most advanced models could pose catastrophic risks. According to reports surfacing Sunday, the team's responsibilities are being folded into existing units focused on biological and cyber threats. It is the third safety-focused group the company has dissolved in 2 years, and it comes as OpenAI restructures ahead of a widely expected public offering. Supporters frame it as a maturing of safety work into the core business. Critics see a pattern of the guardrails thinning just as the models grow more capable. Either way, the move lands at a delicate moment, with regulators worldwide sharpening their scrutiny of exactly the kind of frontier risks the team was built to watch.
Now, a strategic pivot in China.
Alibaba is selling its way toward artificial intelligence. The Chinese technology group has reached an agreement to offload its gaming unit, Lingxi Games, to the private equity firm TrustR Capital for at least $1.5 billion. The internal memo confirming the deal is dated today. It is a clear signal of priorities. Alibaba has been pouring resources into AI and cloud computing, and its own models have seen a surge in downloads this year. Gaming, once seen as a growth engine, no longer fits that story. By shedding the unit, Alibaba frees up capital and focus for the compute-hungry race it now considers central to its future. It's a reminder that, for the biggest players, going all in on AI increasingly means letting other businesses go.
Turning to the funding rounds.
The AI video startup Higgsfield has just raised $400 million, and the valuation tells the story. The company is now valued at $5.4 billion, up from $1.3 billion back in January. That's roughly a four-fold jump in about 7 months. The backers are a heavyweight lineup, including Goldman Sachs, DST Global, and the chipmaker Intel. Higgsfield builds tools for generating cinematic video from text and images, a corner of AI that has become fiercely competitive as studios and marketers hunt for faster, cheaper production. Investors are clearly betting that generative video is heading from novelty to workflow. The scale of the raise and the speed of the markup show just how much capital is chasing the companies that can turn a prompt into a polished clip.
Next, China's chip surge.
Chinese chipmaker Biren is projecting an extraordinary jump in revenue. The company says its first-half sales could grow by as much as 22-fold compared with a year earlier, a surge it attributes to booming domestic demand for AI accelerators. Biren designs general-purpose graphics processors, the kind used to train and run large AI models, and it has stepped into the gap left as Beijing pushes homegrown alternatives to foreign chips. A 22-fold projection is the kind of number that turns heads, and it reflects how quickly Chinese firms are scaling to feed the country's data centers. Whether Biren can sustain that pace is another question, but the trajectory underscores a broader theme: China building its own AI hardware stack at speed, and finding no shortage of buyers at home.
From chips to the battlefield.
The German defense company Helsing is turning to an unexpected partner to break into a new market. Helsing, which builds AI-guided drones and battlefield software, has enlisted the Japanese group Rakuten to help broker a deal to supply its strike drones to Japan's ground self-defense forces. Reuters reported the arrangement today. It's a notable pairing. Rakuten is best known for e-commerce and finance, not weapons, but its local presence and relationships could smooth Helsing's entry into a market that has historically been cautious about foreign defense suppliers. For Helsing, one of Europe's most valuable defense tech firms, Japan represents a strategic foothold in the Pacific. The move reflects how AI-enabled autonomous systems are reshaping defense procurement and how the companies building them are finding creative routes into tightly guarded national markets.
Now, enterprise AI meets medicine.
Tata Consultancy Services, the Indian technology giant known as TCS, has launched a new platform aimed squarely at the pharmaceutical industry. It's called ADD Agent Hub, and it's built around so-called agentic AI, software agents designed to carry out multi-step tasks with limited human oversight. The goal is to speed up drug development and the monitoring of drug safety, work that is heavily regulated and notoriously slow. TCS describes it as an enterprise-ready, role-based AI workforce built specifically for regulated research and development. In practice, that means agents that can shoulder documentation, data checks, and reporting inside strict compliance boundaries. It's a sign of where enterprise AI is heading, out of the chatbot and into the regulated core of industries like healthcare, where the promise is real, but the margin for error is thin.
Turning to robotics.
The driver monitoring specialist Seeing Machines is stepping well beyond the car. The company has launched what it calls its physical AI platform, extending the human-centered AI it built for vehicles into humanoid robots, collaborative robotics, and industrial automation. Seeing Machines made its name tracking whether drivers are alert and paying attention. Now it wants that same perception technology, understanding where a human is looking and how they're moving to make robots safer to work alongside. As factories and warehouses fill with machines that share space with people, the ability to read human attention and intent becomes a genuine safety layer. It's a strategic expansion for the company, and part of a broader shift, the ideas born in driver monitoring migrating into the fast-growing world of physical, embodied AI.
Back to the chip rally.
Here's a number that captures the frenzy around AI memory. The Chinese chipmaker CXMT briefly saw its market value top 4 trillion yuan today, lifted by a roaring rally in memory chips. CXMT is one of China's champions in the kind of high-speed memory that AI accelerators depend on, and demand has been surging as the country races to build out data centers. That 4 trillion yuan milestone, reached during trading, makes it one of the most valuable chip names on China's markets. It's a striking marker of how the AI build-out is reshaping fortunes across the semiconductor supply chain, not just the marquee processor designers, but the memory makers whose components have quietly become just as scarce and just as prized.
Now a lab emerges from stealth.
A new research lab is stepping into the open. Lanyon AI has emerged from stealth, positioning itself as a fundamental research lab focused on scientific and technical computing. Its stated ambition is high-precision, trustworthy computational simulation, using AI to model complex physical systems with the kind of reliability that scientific and engineering work demands. That's a deliberately different bet from the consumer chatbots that dominate the headlines. Instead of chasing conversation, Lanyon is aiming at the hard sciences, where a wrong answer isn't just embarrassing, it's useless. Backers see an opportunity in bringing modern AI to simulation-heavy fields like physics, chemistry, and engineering. It's early, and the lab is light on specifics, but the pitch reflects a growing conviction that some of AI's most valuable work will happen far from the chat window.
Now a European raise.
Over in Germany, the enterprise AI startup Amber has secured 7 million euros in fresh funding. The Aachen-based company raised the round with backing co-led by Ventec and Enard Venture, and it plans to use the money to expand its platform for business customers. Amber works on bringing AI into the day-to-day operations of European enterprises, a market where companies are eager to adopt the technology but wary about data, compliance, and control. 7 million euros is a modest sum next to the billion-dollar deals elsewhere in today's brief, but it reflects a healthy pipeline of European startups building practical, business-facing AI rather than frontier models. For the region, that steady stream of smaller, focused rounds may matter just as much as the headline megadeals.
And finally, the chips behind the data.
We close with the light that moves AI data. The Chinese firm Vertilite has committed 5 billion yuan, roughly $740 million, to build a high-end research and manufacturing base for indium phosphide laser chips. These are the tiny lasers that power optical interconnects, the fiber links that shuttle enormous volumes of data between chips and across AI data centers at the speed of light. As models grow, moving data has become as much of a bottleneck as computing it, and faster optical connections are now a strategic priority. The new base, planned for Changzhou, is another sign of China investing deep into its AI supply chain, right down to the lasers. That's your briefing for Monday, August 17th, 2026. For DX Today, stay curious.